copy trade. Copy trade. Copy trade. copy trade.
Good day to everyone joining us from around the world. Whether you're just waking up my way through your trading session or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for global live stream session. My name is Helen, and I will be guiding you through a exciting 2-hour journey at your heart. And today live stream is not just a presentation, it's a conversation. It's a window into an engine room of one of the most profitable, growing and forward-thinking fund trading firm in the industry. And of course, I'm not here alone. I'm joined with two remarkable guests who have shared with WeMasterTrade represent today, skilled trader, mentor, and role model within our community. The first, let me introduce Overcome always inside for Brian. Welcome, Brian.
Thank you so much, Helen. Hello, everyone, and thank you for spending time with us. I'm totally looking forward to today's session. There's so much to cover, not just about trading strategy or rules, but all the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely, and next to him is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he will fall in our trading space. Please welcome Hidden.
Thank you, Helen, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what WeMasterTrade offer, but how traders can truly take advantages of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you have ever had questions or even doubt, today is the day to ask them.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, so the live stream is going to give you the full picture, not just to highlight reel. Over the course of this session, we want to walk you through what WeMasterTrade truly is, what we believe in, and how our programs are designed, and why we're doing different things from traditional broker or broker. And now I want to be clear, this isn't about the sell, that is about the understanding. We want you to know what you're signing up for, what kind of structure support your journey, and how you can use the structure to not just succeed but scale.
And speaking of structure, we begin by sharing the story behind WeMasterTrade. As a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundations.
Exactly. And from that philosophy flows everything we offer, especially our trading packages, which we'll be discussing in detail. We explain the logic behind each one, what kind of trader they ever look at our packages and thought, which one is right for me. Today we'll answer that.
And more than that, we also do like comparison between packages. We will break down rising, account size, maximum drawdown, consistency rule, and even payouts side by side to help you make a fully informed decision. It's one thing to see number on the website. It's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always how do I stay compliant while trading? Why so we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's sessions. We'll explain what the daily loss limit is, how it's calculated, why it includes both closed and floating P&L, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstandings about trade sizing and risk per trade policy.
And we won't just explain rules in isolation. We explain them in the context of live trading decisions. I'll share some personal example of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
As while we were on the topic of helping you succeed, we will guide you through our programmable promotion plan, including limited time calculators, trader support campaigns, capital activity, and how to properly qualify and submit proof. We have had some amazing response to our promotions, but also some confusion, so we will be showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offerings. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital ties. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from other prop firms. When you trade on a funded account and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just the percentage. We explain the full payout cycle, threshold, and timelines today.
And now, I know many of you watching today aren't just trader, you're also educator, influencer, or people with a large network. That's why we're also taking time to explain our affiliate program, and we will do it transparently. We will walk you through how commissions are calculated, how affiliate referral are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of two referral rule and minimum funding condition.
This is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms and building long-term income streams.
As you can tell, this is not just a surface level live stream. We are diving into everything: packages, role, promos, call a path, profit sharing, and affiliate opportunities. Always one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have questions at any point, please drop it in the chat. Our moderator is watching and will answer as many questions live as we can. Your voice does matter.
And if you are watching this on replay, don't worry. We will leave timestamps and summarize below. And you can always reach out to our terms with any follow-up inquiries. Our support team is incredible and they are really care about helping traders succeed.
And to wrap up this welcome, I'd like to say this: WeMasterTrade is just not a platform, it's a commitment to build real traders, to create fair, structured, and scalable pathway for people around the world who are serious about trading at a professional, not a game. So if you're here to grow, to understand, and to take action, you're actually where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Thank you once again for being with us today. Now, before we dive into the packages, trading rule, and broader promotional mechanic, we want to make a moment to zoom out and offer you the full picture of WeMasterTrade really is, what we believe in, and why we build this platform that way we have. Before, when you put in your trust and your trading into the community, understanding the philosophy isn't just helpful, it's essential. This next segment is about origin, intention, and impact. It's about how WeMasterTrade began, what's the value underpin the firm, and how to translate into real and an outcome for a trader like you. And to walk through that, I'm joined as always with two people who lie and bread, with Principal Brian and Hidden. And let's start at the beginning.
Thanks, Helen. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many broad firms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background, location, or financial situation. We were founded in 2002 as part of the WeMasterTrade Group, headquartered in Vancouver, Canada. Why WeMasterTrade built its name on signal sharing, investor network, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high-potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label, that is the fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we have built, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skills. But we also know that skill alone isn't enough, which is why one of the founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structure. That's why we have invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, which courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about the theory, it's about the implementation. We have designed the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to the funded account. And to ensure that our system and control meet global standard, WeMasterTrade evolved route to how an ISO certification. We confirm that our educational product and trader development program meets rigorous international criteria for qualified, structure, and learner enjoyment.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called prop firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We are not here for a season. We are here to help build careers.
And we have seen that commitment translate into real stories. If you visit our testimonial pages, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had students become full-time traders. We have had women re-enter the finance world after career breaks. And we have had young professionals from underbanked regions finally across the markets with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog session where of experts and educators share weekly insight, trading psychology breakdown, market reaction, and platform updates. We believe that learning never ends, and we keep our trader informed. But let's also talk about the culture. What makes WeMasterTrade different isn't just a product offering, it's the community mindset. We actually promote trader integrity, respectful competition, and knowledge sharing. When you are in the Telegram group watching our YouTube series and engaging with us on live support, we will see that we actually listen.
And I'll speak honestly here. In many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business. Your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it's something we are proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial. Take a look at our funded accounts and connect with people who have gone through the system. The stories are real, the capital is real, the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and education first trading institution. We are here to challenge with the status of trading assets, to build systems to reward the performance over promotions, and to create real, scalable income opportunity for traders around the world who will learn up their starting point. This is more than a drop firm. It's a trading movement, and if you're ready to pass up it, today's LiveStream will show you everything you need to know. And thank you, Brian and Hidden, for that deep and orderly walkthrough. Coming up next, we're going to take the foundation and connect with directly our actual offering. That thing we will be discussing all the different account packages available as WeMasterTrade, how they differ, who they are designed for, and what kind of result you can expect from each. Okay, now we have explored who WeMasterTrade and the principle we stand for. It's time to move into one of the most essential part of this live stream, and a deep discussion on our account packages. This is where our begin for more traders, choosing a structure that's best aligned with their goal, their start, and their current skill level. And when we use the packages, we're not just talking about dollar figures. We're talking about a framework. A package at WeMasterTrade represents a different pathway toward growth. And today we will walk you through all of them, what they offer, their structure, and more importantly, who they design for.
Exactly, Helen. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we've built two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations because we know that traders come with different strength, risk appetite, and timelines.
Let's begin with the challenges model, a two-phase evaluation system built for traders who want to improve their skill before being allocated capital. This structure fair and has become one of the most popular routes for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit target while staying within strict but reasonable risk parameters. There are three stages in total, phase 1, phase 2, and then the funding stage.
And take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a trade record. Let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target, which is $800 without reaching a 5% daily loss or $500, or 10% overall loss limit, $1,000. You have unlimited time to achieve this. That's a key difference from many prop firms. We don't pressure you with deadlines.
Once you pass phase 1, you will move to phase 2, where your profit target drops to 6%, that's $600. The risk will remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account where you trade with real capital. You have no profit targets and your profit share jumps to 90%. That's one of the highest in the industry.
So who is the $10K challenge best for? This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you are still refining your strategy or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect packages with.
And now for those who are confident in their strategy and want to start with the larger account size, we offer 25,000, 50,000, and 100,000 challenge packages. The structure is similar, two phases, the same 5% daily loss and 10% total loss limit, but the profit target scale promotionally.
For example, in the $50,000 challenge, you need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to adjust position sizing.
The $25K to $100K challenges are ideal for traders with more capital management experiences, especially those looking to eventually scale into larger funded accounts. If you are already past all the profit challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the 10,000 challenge. This fee is refundable once you become funded and meet minimum performance conditions. And if you don't go your way, you're eligible for a 30% reset discount to start spread. And what if you don't want to go through a challenge at all, but instead want to access real capital immediately, and you get passive by profit on reserve? That's where our instant funding packages come into play.
And this way, WeMasterTrade truly sets itself apart. Our instant funding model is designed to give its experiences, disciplined traders for the chance to trade real capital from day one. No evaluations, no demonstrate, just pure live trading backed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we're going to walk you through each of the 5-man instant funding phase packages: standard, 5-10-10, 5-10-0, 5-10-10 no PC, and customized. We'll compare the details, but more importantly, we'll help you figure out which package is right for you.
And let me set the scene quickly. All our instant-funded packages give you live trading access from day one. That means no challenge phases, no evaluation, and you pay one, follow the rule, and you're trading like capital. And everyone account, no matter the size, include no time limits up to the 90% profit share, or scale up plan up to 1 million. Support for EAs, swing trades, scalping, and even SFT. And now let's go package by package. And as usual, Brian and Hayden, I want to chime in with the real advice. Who should actually choose which one, and what type of trader you have seen success with each?
Okay, let's start with the standard package. I always describe this one as the best brand for traders who just want stability. You're getting up to $200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there is serious earning potential even if you are taking a slow and steady approach.
And how about a commission?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, indices at $0.5, and stocks at just $0.07 per lot.
And everything is allowed. News trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you're someone who traded rarely, understand your strategy and want to full run of asset and plan to play the long game, this is your sweet spot.
It's perfect for the intermediate to advanced traders who already know their edge but don't want to stress with the target-based challenges. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I also say it suits swing traders. The 4 or 6% risk profile gives just enough flexibility to hold multi-days positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 510 package. Same capital ceiling up to the 200,000, but you get the 5% daily lot and a wider 10% overall limit. Why does it matter?
That extra cushions is massive for traders who scale into positions or take multiple entry per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping, EAs, news trading. It's very trader friendly.
This best for day traders, especially to trading assets like NASDAQ or growth that move fast. If you have got a test intraday strategy and just need some risk breathing room, these are your packages.
And also for a trader who wants structure but don't mind having that profit target, the clear milestone motivates some people, especially if they are payout oriented.
And now here a personal favorite, the 510. You get a 5% daily lot and 10% overall loss, but no profit target, none zero.
And that's a blessing for high precision traders. You're no longer chasing a number, you just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
And this package is for veterans, swing traders, or risk-conscious traders, people who prioritize consistencies over speed. If that's you, you thrive here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This they home.
And now for the rule breaker, or rather who don't want to the latest on how event their profits are. The 510 no PC remove profit consistency tracking, right?
Exactly, same 5% risk profile, but you are not required to keep your profit grow smooth.
That said, trade copiers are not allowed in this one, so it's for manual traders only, and you need to trade responsibly. But for a classic trader who sometimes hit big spikes, this is the place.
So who is for perfect for high risk reward traders or anyone who has issue with consistency rules at other firms. You trade what you want, just keep it inside the drawdown box.
And last but not least, the customized pockets. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking. Plus, you can fund up to $400,000 more than any other account.
It's premium, flexible, and come with all trading style allowed, including EIs, new trading, weekend holding, HFT, and more. So who is for top tier professional as hedge fund traders, signal provider, high volume traders, anyone with a very specific structure in mind. These packages let you view it.
I always say if you try other models and nothing quite fits, build your own blueprint with customize. That freedom is rare.
And to sum up, every instant funded package offer comes with a clear risk parameter, fair commission, debt markets asset, and real profit potential. There are no time limit and payouts start only at 1 day in.
And no matter your strategy, scalping, swing, algo, or manual, there's an account for you that aligns with you. The key is picking the right one now so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
And we will explore our trading role in next segment after we have a short break.
We copy trade. copy trade. We copy trade. We copy trade. Trade. WeMasterTrade.
Welcome back, trader. You know exactly how to protect your account, avoid breaches, and understand the key risk and consistency rule that power our entire platform. Okay, alright, trader. Now that you've seen the packages, let's talk about the part of the either make a break or break your account. That's right, it's time to dig into the trading rule and how to actually stay compliant when you're funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account is come down to one thing: the daily loss limit.
Yes, the dreaded daily loss is the one rule traders think they understand until it kicks them out of their account at 3:17 p.m. on the random Tuesday.
But here's the good news. Once you understand how it works, it really works. It becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So, what is the daily loss limit, also called the maximum daily loss?
It's the maximum account of loss you're allowed to incur in both floating and closed trades on any single trading days. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading days. That's a really important distinction, and is what trips a lot of people up.
Okay, let's work through a live example. Image is started day 5. Your balance is 105,000. Your equity, however, is higher, 107,000, because of open floating profit.
If you're on a 4% daily loss limit, we calculate it off the higher number, so 107,000.
So for percentage of $107,000 is around $4,000. That means your equity for the rest of that day cannot be drop below $102,000, or boom, your account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close. It's real time. Even if you trade If floating loss and you haven't closed it yet, if your equity dip below that threshold for even second, that's it.
Now let's reverse it. Say it's the start of day 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since balance is higher, we base the 4% on the initial balance, so $4,000.
And so now your equity must stay about 96,000 throughout the day. If it drops to the 95,999 after liquidation kicks in, no warning, no marking call.
So what happens if you break this? So the system will send a market order to close all trades. Everything liquidates. Your account is disabled and you can't trade again unless you purchase a new packages.
And here's the kicker. The auto close happens when the system detects the threshold was crossed. But due to market fluctuation, your final profit and loss might look worse than the actual threshold. That's because the system executes a closure based on price slippage at the time of liquidation.
So even if you only intended to take to a 3,900 lot, once Lipay spike in gold or Nasdaq, and suddenly it's 4,200. That's why we say don't write yet.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
First tip, know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2. Check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you're heading toward a violation.
Tip 3. Your dashboard or tracker. Inside WeMasterTrade, we provide rich dashboard that show your live loss status. View them, check them, don't rely on memory.
Also, pause trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during new hours. If you are trading gold during NFP with full loss size, you are practically begging to break the daily loss rule, cut position size and ride post volatility.
Oh, and what are the top rookie mistakes you see when it comes to the daily loss?
So number one is over leveraging. Traders opening positions that are 5, 6 or 7% of their account thinking they've closed quickly. But if the trade turns red fast, it's already too late.
Number 2. Holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 pip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that flow trade does all matter, they're not. Remember, equity include both loading and slow position. The total equity lies in your score.
I always say this to new traders. The daily loss rule isn't your enemy. It's your account's airbag. It's designed to protect you from doing something irreversible.
Exactly, it's forced discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you will last longer than 90% of the market.
And one last note, this isn't just about rule, it's about trust. We want to fund you because we trust you will manage risk responsibly. The daily loss is there to protect that trust on both sides. And in the previous segment, we covered the daily loss rule. And if you haven't already clicked that one, you're missing out. But now we move from the daily loss, daily boundary to the absolute boundary. And I'm talking about the maximum loss rule. And also at your account stop loss, the line that can be crossed. Not just the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. but then a week later, they chip away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seat belt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is the max loss rule? Let's define it simply. It's the total maximum loss amount you're allowed to lose across all trades for the entire account. If your equity, that's it, your real-time capital, including open trades, ever brought below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which resets every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your packages. It's typically either 6% or 10% for your balance, initial balance, not your equity, not your profit, but the original number you started with.
And like what for consider example, suppose you have an instant funding account with initial balance of 50,000 and the max loss limit is 6%, which is 3,000.
That means your equity can never go below $47,000 ever. Doesn't matter if you made $1,000 yesterday, the total loss from your highest bond back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you have lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at 46,800, just below the limit account close.
And just to be clear, it's not about the net gain or loss of your trades. It's about where your equity stands in real time relative to that stop loss floor.
Here's what it gets interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you're in profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly, you now have the 4,000 in total buffer because 51,000 minus 47,000 equals 4,000. So your profits give you cushion, but the floor never move.
Once your equity broke below that maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's just execution reality.
And more importantly, once it's breached, that's called a permanently disabled. You will need to purchase a new packet if you want to continue trading. No reset, no rollback.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your max lot floor. Don't wait for the dashboard warning. Calculate manually.
Second, use your profit as protection, not permissions. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gains by reducing loss size when you are ahead.
For the third, manage your floating loss aggressively. Even if you're positive overall, a single trade with poor stop placement can take you from steady to shutdown in a few minutes.
Fourth, stay cool when you're closed. If you're down 5% out of your 6% limit, that's not the time to double down. That's the time to step away, pause, and rethink your entries.
The biggest mistake, underestimating floating drawdown. Traders close 3 losers and think, okay, I have still got room, but they forget about the 4 trades floating minus $1,800.
Second, trader who chase recovery after a bad day, they lose 4% in one day, come back swinging the next day, thinking they'll make it back, and instead take another 2%, boom, violation.
The third, and this one hurt, ignoring sleeping during major news. Even with a tight stop, new candle can get you straight through your limit.
The max lot rule is here for a reason. It's not here to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you are constantly brushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
And as WeMasterTrade, we're not just giving capital, we're teaching structure. And the market loss rule is what separates grammar from professional. So remember, the market loss is a percentage of your starting balance. A typical 6% or 10% is calculated using equity, not balance. It includes both close and floating losses, and one breaches, your account is gone. Okay, coming up next, we will explore the consistency rule and why stated rule fit matter more than big spike when it comes growing, scaling, and getting paid.
If you have ever made $5,000 in one day and then made $200 in the next 4 days, then and wonder why your payout got flat, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
And alright, trader, we talk about the daily loss and we just covered the market loss rule, two pillars of protecting your capital. But now it's time to shift gears just a little and not talk not about rate, about the reserve. Because here the thing, it's not just about staying alive in the game. As WeMasterTrade, we want to see trader grow, scale, and actually earn. And to do that, we need to more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rules, is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharing, or even scale up. So if you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
And what is the profit consistency rule? So let's get to find it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you have one giant profit day and then smaller and or losing day, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we scale.
So how is calculated? The formula is really straightforward. Take your best trading day profits and divide it by your overall profit since you started the account, then multiply it by 100.
Okay, the bad day divide total profits multiply 100 equal to profit consistency percentage.
And just to be clear, the best days refer to your highest close profit in a single calendar day, and total profit is the sum of all your close profits minus any closed losses or open losses across the life of the account.
Let's say you have had the following results over 5 trading days. Day 1 plus $100, day 2 plus $200, day 3 minus $50, day 4 plus $100, day 5 plus $60.
And that means your total net profit across 5 days is $100 plus $200 minus 50 plus 100 plus 60 equals to $410.
And your bad days were they too, that $200 profit.
So now we apply the formula. $200 divide $410 equal 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistencies, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So what does this mean? Even though the trader is profitable, they are not consistent enough. They has one big day that make up over half their total profit. That's not substantial, and that's what we're looking at.
And this is where I really want to speak to traders. If you're relying on one or two big days to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. We must evaluate your consistency over time. Traders who slow long-term balances are the ones who get scale up, who get features, who get trust with more capital.
Alright, so let's extract the number. What an acceptable profit consistency ratio?
Typically, this rule is set at 20%. That means your best day should not exceed 20% of your overall profit. And let's say you are over the limit, don't panic. You are not disqualified. You just need to keep trading and even out the curve.
Here's how to do that. Number one, trade smaller size for a few days. Number two, take smaller control wins and for like $200 or $300 per day. Number three, avoid big swing trades that could spike your ratio again. And last but not least, spread profit across multiple days, not one monster setup.
And for the using EA, monitor your equity curves. If your EA is scooping profit heavily into one day, you might need to rebalance. Deposit might be profitable, but it won't pass this rule unless the configure with pay our profits in mind. Okay. The next time we will move on to the highlight economic news of the week.
Good morning, mate. Big data day ahead. EBA, UK retail sales, Eurozone PMI, and US CPI.
Oh yeah, looks like a bad Friday, a bad Tuesday. Let's go through one by one.
Starting with the AUD, EBA got Bunrock speech. If she sounds hawkish, mentions the persistent inflation or higher wage growth, AUD could pop.
True, but unless she hints another rate hike, any spike might fade. I wait for the reaction on AUD or USD around 0.65 zone before touching it.
Next, GBP retail sales came in at minus 0.4 percentage, way below the 0.5 forecast. That's weak consumer demand, definitely a red flag for the UK economy.
Exactly. London Open could sell it off hard. I'm eyeing GBP USD short if it retests 1 to 1.2200, maybe small risk. Stuff about 1.2240.
Then the Eurozone PMI still soft. French manufacturing at 48.2, Germany at 49.5, or under 50, still contraction.
So euro is not recovering yet. Might keep euro USD heavy, especially if US CPI later come in strong. Fade any rally towards 1.0810 to 1.0830.
UK PMI is at 3:30 p.m. Manufacturing 46.6, services 51. Not great but not collapsing. Shows stabilizations, but the overall sentiment is still weak after retail sales.
Yeah, GBP might bounce a bit on PMI, but outsell the rally. I see more downside pressure unless US CPI disappoint.
Speaking of CPI, USD data at 7:30 p.m. is a key today. Forecast is 0.3 core, 0.4 H line, but YY is rising to 3.1 percentage from 2.9 percentage. It's thus tricky inflation, which supports the higher for longer Fed stance.
If CPI YY hits orbit 3.1%, USD will risk higher. I'll buy USD JPY on breakout and maybe short go XAU USD, but need to manage volatility. CPI moves are wide.
Finally, US CPI, US PMI, manufacturing 51.9, services 53.5, still in expansions but slowing a bit.
Yeah, if USD already rallies on CPI, PMIs might not move much, but if they surprise stronger, could extend the USD trend into next week.
So, big picture, AUD depends on EBA tone, GBP bearish bias, EUR slightly bearish, USD strong bias if inflation holds.
Agree. My plan: buy USD dips after CPI, sell GBP rallies after weak retail plus PMI combo, watch gold shorts if yields rise again, tie stop small sign Friday volatility.
Sounds solid. Let's stay alert around 7:30 to 8:45 p.m. That's the high volatility window.
Copy that. I'll ping you if CPI hits over 3.1%. That's our green light for USD strength.
Okay, thank you so much to all amazing viewers who joined our live stream today, and we truly appreciate your time and support. We hope that the live session had helped you gain a better understanding our companies, our trading rule, and the exciting promotion we currently offering. Your engagement and question mean a lot to us, and we always happy to connect and share more useful information with our trading community. Stay tuned for our next live streams. We can't wait to see you again, bring you even more helpful updates and insight. And happy trading!